All right, welcome to Talk Tickers. Today we are digging into Viper Energy's third quarter earnings call. And let me tell you, this was not your average quarter. We're talking about a massive acquisition, a huge strategic pivot, and a stock reaction that honestly just didn't seem to make any sense. So we're going to figure out what's really going on here. So let's start with the market's final verdict for the day. Despite what really looked like a very strong quarter, Viper's stock ended the day down 3%. And on some heavy volume, too. Now that right there, that's the puzzle we need to solve. And this is the million-dollar question, isn't it? The company beat on cash flow, they raised their guidance for the future, so what gives? Why did investors hit the sell button? Okay, let's dive into the numbers. First up, let's look at the actual results. The confusion really starts with the headline numbers, because depending on how you slice them, they tell two completely different stories. You can see the divergence so clearly right here. If you just look at the official by-the-book GAAP number, you see a net loss of 52 cents per share. Yikes. But that's because of a huge non-cash impairment charge. Now, the number that analysts actually care about for cash flow, that adjusted EPS, well, that was 40 cents, a really solid beat against what the street was expecting. And operationally, the story was just plain strong. Production was solid, and get this, management returned a whopping 85% of their available cash right back to shareholders. We're talking a nice 58-cent dividend plus a super aggressive $90 million share buyback. And if you thought that was good, looking ahead, the picture got even better. Management's guidance for the next quarter points to a pretty substantial, roughly 20% year-over-year jump in oil production. And that's on a per-share basis. For a royalty company, that is an incredibly powerful growth signal. So you have to understand, this wasn't just another earnings report. This quarter was a period of major strategic transformation for Viper. And this is absolutely key to understanding the company's long-term story and, where they're trying to go from here. Management was busy, to say the least. They made 4 huge moves. First, they closed that massive $4 billion acquisition of Sitio Royalties. Then they immediately started selling off their non-core assets to become a pure-play Permian Basin company. They took that cash, paid down debt, and then got really aggressive buying back their own stock. I mean, this was a complete reshaping of the entire portfolio, all in one quarter. And this whole strategy, it translated directly to how they talked on the earnings call. Management sounded incredibly confident, and they focused almost entirely on cash flow and shareholder returns, basically just brushing off all that GAAP accounting noise. I mean, this quote from the CEO, Kees van Hoff, really says it all. He put it out there, crystal clear. Once they hit their debt targets, they're on a path to return nearly 100% of their cash to stockholders. That is a powerful commitment. And the Q&A session just reinforced that confidence. They didn't just say they were buying back stock, they framed it as a specific investment to take advantage of what they called a market dislocation. They also said, hey, we're pausing big M&A for now, and then signaled strong organic growth coming in 2026. They even tackled concerns about new shareholders from the Sitio deal selling off, saying flat out, they have the firepower to absorb it. Okay, so this brings us right back to the central puzzle, right? The massive disconnect between the company's super confident, cash-focused story and the stock's negative reaction. And here it is, the conflict in a nutshell. The market, for whatever reason that day, seemed totally fixated on that scary-looking GAAP net loss and the big impairment charge. Plus, the whole energy sector was weak. But meanwhile, you have management just hammering the table on cash generation, on returning that cash to shareholders, and on their accelerating per-share growth. It's like they were speaking two totally different languages. So let's put it all together. You've got this strong, fundamental cash flow story on one hand, and this negative, maybe technically driven market reaction on the other. Where do we see this going? What's our call heading into the next earnings report? Well, we think the market is just getting this one wrong, plain and simple. In our view, that sell-off looks like a clear mispricing of the fundamental strength and the real trajectory of this business. And for that very reason, we are initiating our coverage here with an outperform rating. Our thinking here is pretty simple, really. The market is getting bogged down in accounting noise that has nothing to do with cash flow. We believe that as that asset sale closes and Viper gets closer to that 100% payout target, the market is going to be forced to wake up and recognize the superior free cash flow and growth profile of this new, purified Permian royalty machine. Now, for a more tactical idea, you could look at a pair trade. The idea is to go long Viper Energy while going short a broad ENP, or Exploration and Production ETF, like XOP. What this trade does is it tries to isolate Viper's unique, high-margin, zero capex royalty model against the regular producers who have to deal with capital constraints, service cost inflation, and a lot more operational volatility. It's really a bet on a superior business model. So that's our take on Viper Energy's wild Q3. And as always, this is not financial advice.